Thank you so much, Raleigh, for the wonderful introduction, and I'm happy to be here on behalf of Trading Pub. It's going to be a fun session today. Uh, Binary options are really a fantastic way to participate in moves in the market, and the interest and the fascination with them is growing every day. So we're going to talk about how to trade binary options, and as you could imagine, it's probably going to be the perfect session for someone who's new to binary options, that doesn't have a lot of experience with them, and also someone who might just be getting started. However, a little later on in the session, I'm also going to be sharing probabilities that I'm using to trade binary options and a way to put the probability or edge in your favor when looking at opportunities. So even though it's catered towards the beginner trader, it's also something that maybe a more experienced trader might want to take a look at, especially once we get past the introduction part of today's presentation. So it's going to be a fun one. And in this session, we're going to talk about what binary options are, how to trade binary options, and I'm also going to show you how to find high probability trades. Before we get going, it's important to understand that trading does involve risk. Futures and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. So don't trade with money that you cannot afford to lose. This course is neither a solicitation nor an offer to buy or sell futures or options, and no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in today's session. Past performance of any trading system or methodology is not necessarily indicative of future results. Yes, it's an important risk disclaimer to read, but bottom line, trading does involve risk, and you should know that before you consider trading any vehicle. So to begin with, why trade binary options? Well, for many traders who are just getting started with options, especially equity options, there's a lot of lingo and terminology and so many different strategies and scenarios that you can trade. And binary options, in my opinion, is much more straightforward. So it's a nice complement to the trader who's already trading other vehicles, but it's also a great starting point for traders who are interested in trading options but just haven't gotten involved with equity options because of the complexity. Another great thing about binary options is that the risk is fixed on the trades that you are going to place. So before you risk any money, you're going to know exactly how much you're going to risk on that trade. And if you're trading on an exchange like the Nadex, the most you can lose on one contract is just $100. So it helps traders minimize risk and, more importantly, manage their risk when they're looking to trade the markets and take advantage of market opportunities. Another nice thing about binary options is you're not just stuck trading one market group or market class. You can trade binary options on major indices like the Dow 30, the S&P 500, indices, European indices as well. There's binary options on currencies like the euro against the dollar, the euro versus the pound. There's binary options on commodities and even events like non-farm payrolls. So for those of you who find that you're pretty good at determining what the number is likely going to be, this might be something for you to consider, because it doesn't matter what the markets do with that number, it just depends on what that actual event and number is. So to begin with, what are binary options? Well, a lot of people refer to them as all or nothing options, because when you go to place a trade, you're either going to get the payout based on the option that you're trading, or it's going to be worth nothing at expiration. And this is also known as a yes-no proposition, because you're basically asking yourself, is the price of a market going to be above X amount at expiration or below? If it's going to be above that amount, if you believe it will, you want to buy that option. If it's going to be below that amount, or you assume that it will, or based on your analysis you believe that it's going to be below that value, then you're going to sell that option. And as I mentioned, with binary options with Nadex, they're going to settle at $100 if that question is true, or they will settle at 0 if that answer is false. Now, when it comes down to it, what you're really asking is, are you bullish or bearish on the market? Here's an example when the S&P was trading back at 1946 and a quarter. But if you're using a strike price of 1950 and you're starting to trade at the beginning of the day or the middle of the day, and you believe that the market is going to make a rally and make a move above 1950, then you would be bullish the market and you'd want to be a binary option buyer. If you believe that the market's going to continue to move lower and you're bearish the market, and you believe that during the day the market's going to move below 1950 and close there, then you want to be a binary option seller. So you're assessing what's going on in the market and you're making a decision on what option you want to trade based on the strike price that you're looking at and also the option's expiration. Now, if you're going to go and buy your first binary option, here's an example using Nadex. We have an order ticket, and you see that on the far left side, the price is 48. On the far right side, the price is 53. If you're going to be a buyer, you're going to be buying at that ask price. That's the $53 mark. And the max risk on this trade, I'm sorry, I have to take that back because it said 53, but when I entered this order, you see at the bottom, you have a max profit of $52 and a max loss at 48. Because when I put this ticket in, the price was $52. And I was mentioning that when you go to place a binary option trade, you know what your max risk is going to be, because if you're a binary option buyer, it's going to be the difference between what you're paying and that $100. So your max reward is 52, your max risk is 48. Let's go back one slide. And if you're selling your first binary option, there you go, sorry about that. If you're selling your first binary option, you're going to sell at the bid, which would be in this case 48. So the max risk is going to be 52 and the max reward will be 48. So let's look at take a closer look at the binary options risk and reward when we're making decisions here. As a trader, you're going to be looking to buy an option, and the price that you pay is what you're willing to risk on that trade. The max reward is $100 minus the price that you paid. And all of this is set up for you so you know what you're risking before you ever get into a trade. Now, I'm going to go through a few examples, and I actually want to bring up the software and just show you, because I think it's easier when we run through some examples of what's going on in the market right now, and also take a look at some charts, because it's so easy to get caught up in the slides, but I like real-world examples. Before we do that, though, when it comes to binary options markets with, say, the Nadex, here you have all of the different markets that I would be looking at: the US 500, Wall Street 30, which is the E-mini Dow, US Tech 100, which is the E-mini NASDAQ, US Small Cap 2000, which is the E-mini Russell, commodities like crude oil, natural gas, gold, silver, and copper, and currencies like the euro versus the dollar, the pound versus the dollar, and the yen versus the dollar. Why Nadex? I saw that this was a question coming up earlier. Will this be for U.S. Trading or European trading? There are binary options outfits overseas, but if you're in the U.S., the Nadex is a great exchange to trade through if you are interested in binary options. It's the North American Derivatives Exchange based in Chicago. It's regulated by CFTC, and funds are held in segregated accounts. So there are some safeguards built into this exchange and trading through Nadex. One big advantage is that with Nadex as an exchange is matching buyers and sellers. They receive an exchange fee for that transaction, but the Nadex isn't profiting from you losing money or isn't losing money when you make money. Instead, they are helping you make a transaction, and in return, they are paid an exchange fee. And this leads us to transparency. Because of this, you're able to see orders in the market, and you're able to see what everybody else is seeing when you go to place trades. Now, when you go to trade a binary option, there's really 4 things that you need to make a decision on. You need to select the market. We just went through a dozen or so markets to consider trading, and based on your analysis, the markets you're most comfortable with and what you expect from that market, that would be the first decision that you need to make. The next step is to select the market direction. And so if you are bullish the market, then you'll be a buyer. If you're bearish the market, you'll be a seller. Then you want to select the best expiration for your strategy. Now with binary options, you can look for expirations at 12 Eastern Time, 1 Eastern Time, 2 Eastern Time, and 4:15 p.m. Eastern Time when the market closes. So if you're looking for short intraday moves, you could be a binary options trader and look for those intraday expirations. If you are more of a swing trader or a daily trader where you're looking for the expiration at the end of the day, that's one way of trading. That's actually one of my preferred ways. There's also the ability to be more of a swing trader where you're actually looking at an expiration taking place at the end of the week. And that would be another way to trade binary options. But those are the 4 questions you need to ask yourself or you need to decide upon before you go to place your first trade. So you buy a binary if you want price to be above the strike price that you're looking at expiration, or you'll sell a binary option if you want the price to be below the strike price or expect the price to be below the strike price at expiration. Now when it comes down to it, binary options are based purely on probabilities. That's what's pricing binary options, the probability that an option will have value or not have value at that expiration. So the best way to trade binary options, in my opinion, then, is to use probabilities to find the best setups to trade. To put probabilities in your pocket to help you find the best opportunities based on probabilities. And my favorite setup to do this is using a concept known as the power crossover method. Now this is a strategy that I've used for stocks and options, and I found that because it helps identify the direction of the market, and doing some analysis this year on the probability of an outcome at the end of the day based on what's going on with those signals, I found that we can have some really high probabilities and some nice trading opportunities using this method. Now, you don't have to use this method to make trading decisions. You could come up with other indicators that help you identify trends. Maybe it's using a simple moving average crossover. Maybe it's a breakout strategy. Maybe it's something that you've tested that gives you an edge, that gives you the probability and puts that in your favor. But for me, that's been the power crossover method. So what I'm doing here with this strategy is I'm using buy and sell signals for the strategy based on daily charts. So even though we have intraday expirations taking place, I'm really using a daily chart, and I'm trying to determine whether the market is likely going to close above the previous day's close or below the previous day's close based on market conditions and the general trend of the market. And then knowing those probabilities, I can choose the right strike, the right expiration, and I could decide how much I'm willing to risk on a binary options trade before a trade is actually placed. Now, we're going to look at a chart, and I'm going to show some examples and show you exactly what I'm looking at when I'm trying to find the probability that's in my favor, that I could work with, that I could trade, and that I would be willing to risk money in the market with. But there are 3 concepts that I'm going to refer to when we're looking at the charts, and I wanted to make sure that these were clear. The first is trend day. I'll refer to a trend day as a day when all 3 of the indicators that I'm looking at are confirming the trend. So that would be considered a trend day, if all 3 are bullish or all 3 are bearish. Now, I'll also refer to a concept of if triggered. A trigger means that price traded above the previous day's high for an uptrend or below the previous day's low for a downtrend. So instead of just looking at the previous day's high and whether we break out of it, or the previous day's low and whether we break below it, I'm also using the 3 indicators to confirm the trend. But the trigger is if we have a previous day's trend and then on the day we're looking to trade, we trade above that previous day's high or low. I'm also going to refer to the idea of the trend continuing. And as you probably know as a trader, there's all sorts of different ways to analyze the market and make a decision on whether or not the trend's continuing. It could be higher highs, lower lows, any analysis or technical indicators that help you make that decision. For me, it's basically if the market closes above the previous day's close and there's an uptrend, then the trend has continued. If the market closes below the previous day's close in a downtrend, then the trend has continued. So for me, it's very simple. Trend continuing means that on the day that we're trading, if it closes above the previous day's close, we have a higher close, the trend has continued, and the exact opposite for a downtrend. So let's look at some charts, and I'll show you some examples of what I'm looking for, and then we'll look at some probabilities that will help us determine the right binary option to trade. So let me bring up my charts, and there we go. So this is a chart of gold, and I have the three indicators that I use for the power crossover method. When those indicators are bullish based on the settings that I use for the strategy, I have green shaded bars, which you see here. So these would all be bullish days, and a uptrend there. For a downtrend, I have it shaded where all three indicators are bearish, and when the indicators are bearish, we see that for that day we have a red bar. So this isn't something that you need to do with your charts, but it's a nice visual that helps me easily see if the market is in an uptrend or a downtrend based on those rules. A black bar just means that we have some divergence between those three indicators. It could be that one's bullish and two are bearish, or two are bullish and one's bearish. Any combination other than all three confirming the direction of the market would give us a black bar. And so this helps me make trading decisions. And what I've found is that most of the time when we have a scenario like this where the market's bullish based on the method I use, that the trend continues. And remember, a trend continuation means that the close is greater than the previous day's close. So we see that for most of the days in an uptrend, and in a downtrend we see that the trend continuation, a close that's below. Okay, so let's take two. Sorry about that, everybody. Basically, with binary options, I believe that probabilities are really what matters. The probability that the market's going to be higher or lower, or that the current day is going to close above or below the previous day. And when it comes down to making these decisions, I use the power crossover method. Now, here we have all three power crossover indicators bearish. So we have a red bar here. And with gold, what I would expect is that if we trade through the low of this day, so here we have a downtrend day, if we trade through the low of this bar, which in this case the low was 1263.5. So it doesn't matter if we trade at 1263.3, 1262, 1260, but if we trade through the low of that day, then I expect on the next day, I'll make it exact, 1263.4 or lower. We trade through this low, then on the next day, based on my analysis, I believe that there is a high probability that this day is going to close below our first trend day's low and the close. So I could use this information. If I know that there's a high probability that we will close below this day's close, then I can choose a strike price that makes sense, and I can choose a binary option expiration that makes sense. And I could also analyze the market and what's going on and decide if the probability makes sense for me to take that trade. And we'll look at a few examples here, but I could use this information to choose the right binary option to trade, to determine whether I should be a buyer or a seller, and then analyze how much risk is involved in that trade and decide if it's a trade that I should be taking. And as you can see here, when we have these scenarios present, the probability that the trend will continue is much greater. I mean, here, the same thing. We have a trend day here. This is the low of this bar. On this trading day, we take out that low and we close below the previous day's close, which I would expect would happen based on those rules. On the next day here, we take out the trend day's low, and on this day, we can make a decision to sell an option at a strike price that's basically at the previous day's close or higher, anywhere up here, and we expect that this day is going to close below this day's close. So this is how we take advantage of opportunities in a downtrend, and I'll show you some probabilities based on testing that I've done this year. But we see like even just these 4 trades, 4 out of 4 trades using the previous day's trend and the previous day's close would have worked out nicely based on the rules that we just presented. 4 out of 4 were successful. Now we could keep going here. Here's one that did not work. So 4 out of 5. But with an 80% probability that the market's going to be lower the next day, we can use that to start buying binary options. Now let me show you some examples in an uptrend just so you see the exact opposite, because we definitely want to trade uptrends as well. Here on this day, we have an uptrend based on the 3 indicators that we use for the power crossover method. So I would use this day's high. Now on this trading day, we actually, the close of this day is 1271.8. The close of this day is at 1271.8. Now, when we're trading a binary option, we actually don't want the close to be exactly at the strike price that we've selected. We want it to be higher if we expect it to move higher. So this one didn't work, but here's the key. For this to be triggered, what we talked about a little bit earlier, we need to trade through this day's high, and that never happened. So on this day, I would not have traded a binary option based on the rules that I'm sharing today, because we never took out the previous day's high. Since we didn't take out the previous day's high, I didn't see this as a high probability event. And you see what happens on the days when we don't take out the previous day's low. Like here, we don't take out the previous day's low. That one might have worked out, but you see that if we don't have that follow through, then the probability that the market will be lower in a downtrend or higher in an uptrend starts to be much lower. Now, on this day, we'd want to take out this trend day's high. It's a trend day because all 3 indicators are bullish. The high of this day is 1273.5, so we want to trade at 1273.6 or higher. It easily happens on this day, and we close above this day's close. So on this day, the key factor was A, that we have a trend according to rules, and B, that we have a scenario where the market has triggered a trade for us. And in this case, using binary options, we would look at selecting a strike price that is equal or below the previous day's close, and then expect that the outcome is going to be positive, and that we have a high probability event where the day is going to close above this day's close. Let's look at another one. All 3 indicators are bullish, so we have a trend day. On the next day, we're going to pretend that the next day hasn't happened yet. The high of this bar is 1279.2. So if we trade above 1279.2, it doesn't matter if it's 1300 or 1279.3. But if we trade above that price, we have a trigger. On this day, as soon as we started trading above that price, we could look to buy an option, and we see that on this day, we clearly trade above the previous day's close. And so that trigger, that trend, helps us identify a higher probability trading scenario. And so this is the type of setup that I'm looking at based on the power crossover method indicators and the rules for the strategy. But I want to go back and I want to share with you some probabilities that I've come up with this year using this setup, and we could see what markets are actually working pretty nicely. So, and this is updated about to the beginning of July. So, but following the markets, the percentages are maybe plus or minus 3%. So they could be even better, maybe slightly lower, but the general percentage or probability really hasn't changed just with missing a couple of weeks of data. So in 2014, if we're looking at the E-mini S&P, the day after a trend day, based on the rules that we discussed, if triggered based on the rules that we discussed, the trend continues 72% of the time. So 72% of the time, the E-mini S&P closes above the previous day's close based on those rules. Now the mini Dow actually did a little better. The day after a trend day, if triggered, the trend continues 74% of the time. If we move on to commodities, here are some commodity probabilities. Gold, the day after a trend day, when there's a trigger, the trend continues 76% of the time. Okay, with silver, the day after a trend day, if triggered, the trend continued 89% of the time. So, I mean, anything above 60% is something that I could work with. But if we get closer up to 89%, that's a pretty convincing, high probability event that the trend will continue based on those rules. Copper, the day after a trend day, if triggered, the trend continued 69% of the time. Here are some other commodities. With crude oil, the day after a trend day, if triggered, the trend continued 83% of the time based on the rules. Another high probability, and based on the way crude has been moving this year, using the power crossover indicators, it's no surprise to me. There's been some beautiful trends, and this market has really moved nicely. The key is, how do we trade it? What do we do with it? And the trend continuation and knowing probabilities has really helped. Natural gas, I threw it out there because it is a great market, but the probability was a little lower for this one. The day after a trend day, if triggered, the trend continued 56% of the time. So that would be one I'd keep an eye on. If we start to creep up above 60, then we could consider trading natural gas using this idea. But it just shows that there are multiple markets to trade. We don't need to trade all of them, especially if we don't have an edge, if we don't have a strong, convincing probability behind us helping us with the trading decision that we're making. Here are some currencies that I evaluated. The euro against the dollar. Day after a trend day, if triggered, the trend continued 66% of the time. So 2 out of 3 times the market would trade higher on a trend day, following a trend day if triggered. The pound versus the dollar, the trend continued 66% of the time, so same probability as the euro versus the dollar. The yen versus the dollar, a little bit better. Day after a trend day, if triggered, the trend continued 72% of the time. So you have some probabilities now, and with these probabilities, this is how I would make trading decisions. So we mentioned the 4 keys to trading a binary option. 1, you need to select a market. Well, if you want to use a method like the power crossover method, then you want to select a market with the best probability. 2, we select the direction of the market based on the power crossover rules. With the 3 indicators that we use for the method, it's very easy to see if we have an uptrend or downtrend. The probability changes when it's triggered. Step 3, select a daily or weekly option. For me, I like the dailies if we're using a daily chart with this idea. You're going to have more trading opportunities, but you can use the same concept if you prefer trading a weekly option or you like the risk-reward relationship with a weekly option. You could use the same idea with a weekly chart and look at weekly expirations instead of doing this every day. Now, if we have a market with a good probability, if we know the direction based on the rules, if we've selected an expiration, whether it's daily or weekly, we then need to select the strike price. And this is a very important part of trading binary options. It's knowing the right strike price to choose and select. And based on my trading using the power crossover method, I want to trade the strike price in an uptrend that is equal or below the previous day's close. So now I could define exactly what strike price to trade. And I know based on the probabilities whether or not it makes sense for me to make that decision. Now in a downtrend, it's the opposite. I want to select the strike price that is equal or above the previous day's close. So now we know what strike price to select, what expiration to select, the direction to take, whether to be a buyer or seller, and we have markets that we can evaluate. Now here's another important thing. We saw some great probabilities there, and I would say anything above 60 is something I could work with, but 65, 70% or better, those are some of the nice probability stocks or markets to consider, indices to consider with this method. And what I look to do is to buy or sell for $5 better than the probability. So as an example, if the probability of the market trading higher is 70%, and I'm looking to buy a binary option, I want to buy that binary option for $65 or less. If I could buy that binary option for $50 and I know that there's a 70% chance that the that the market's going to continue the trend and that binary option is going to be successful, that's great. That's great because I'm buying it for 50. I make $50 if I'm right. I lose $50 if I'm wrong. So if I'm at a 1-to-1 risk-reward relationship with a 70% probability, the odds are in my favor. Just another example here. Let's say that there's a probability that, we could use, what was it? It was, I think crude oil, no, silver was 89%. So if I see that I can buy a silver binary option at a certain strike price based on those rules, and I could pay $60 for it. My risk is what I pay. So I'm risking 60. My reward on that trade would be 40. For some people, making more than you would be risking on a trade could be a little uncomfortable. And that's understandable if you don't have probabilities to work with or you don't have an understanding of probability. Because if it's a 50-50 chance that the trend will continue and you're risking 60 to make 40, that's a losing scenario. But if you're risking 60 to make 40 and you're going to be right 80% of the time theoretically, now you're in a good scenario and it makes sense to risk more than you would be making just purely based on the probability. So that's what I'm looking to do when it comes to selecting the market to trade, the direction of the market, the expiration of the option that I'm looking to trade, and also the strike price and how much I'm willing to pay or how much I'm willing to risk when I take this binary options trade. So what I want to do is, here's another example that was written out. So let's go ahead and use this. I came up with some of my own, but this was written out. I forgot about this one. So we select the market. The US 500 is what Nadex refers to as the S&P 500. If you go to the Nadex website, it gives you the list and you know exactly what that underlying market is referencing. But the US 500 is the E-mini S&P or S&P 500. The direction, let's say we want an uptrend. The expiration, let's say we're looking at dailies. The strike price, well, if the previous session's close was 1950 and a quarter, and there's an uptrend, and it's triggered, and we believe that the current day's close is going to trade above or end above the previous session close, then that means that we need to select a strike price that is 1950 or less. We want to select a strike that is actually equal or less, but with the way that strike prices are positioned, it would be 1950 with Nadex. They don't have strikes that are quarter point increments for the ES. And with a probability of 72%, I want to buy the option $5 better than the probability. So at the very most, I would want to pay $67. This was a trade I placed on June 20th, and on this example trade, I actually got in at $65. Now, there's two things you can do here. One, if you're following the markets, you could actually see if you could get in at a better price depending on fluctuations in the market. So if you want to actively monitor the markets and keep an eye on what's going on, you might even be able to get a better price. But if you don't want to actively monitor the markets, if you see that the day is triggered, then you could go ahead and put your order in at the beginning of the day or early on in the session. So if the price of that option is currently trading at $75 and you know that that's too expensive and you want to get in at 67 or better, you could go ahead and put that order in at 67 and just let that sit for the rest of the day. If you get filled, you're filled. If you don't get filled, you move on to the next day. Now, what I want to do here, and then we can get to a couple of questions. I see that there were some that came through, but because of the little technical challenges, I wanted to make sure we got through some of these examples and were able to look at the charts. But there's two things I want to mention. First of all, with the power crossover method, there are some specific rules for the indicators that we use for the strategy, and we have a power crossover method DVD that shows exactly what those rules are. So all of the rules are laid out in the DVD. Now, also, there's so many different probability scenarios to go through. There are a few other sessions that are recorded on this topic. One is a session that included a higher probability first trend entry rule. So we talked about trend days, uptrend days and downtrend days. And if we look at the first trend, the first signal in the trend, we could actually increase the probabilities that we're working with. We have fewer trading opportunities, but in most markets, that's even a higher probability event than the ones that we looked at. So for those of you who are more conservative, that might be a signal that you want to look at. And that's included in one of the DVDs that we have available today. We also talk more about spreads. Someone said bull spreads are a little harder to trade, and so in one of those Nadex sessions, we also did a session that introduced spreads. So if those are new to you, I think we present it in a way that's logical and easy to understand. And so not only do you have the power crossover method rules that you can use not only for the binary options examples that we discussed today, but you could also use for stock trading and even option trading. So it helps us identify trends really in any market, not just limited to the binary options world, but I think the binary options world is where we could apply the strategy using probabilities, and that makes it so exciting. So that's all included in this DVD special, and you see that there is a link to the special, www.rockwelltrading.com/tradingpub, and when my computer had its little blip, you want to make sure that trading pub is all lowercase, not capitalized there, because that will be a problem. I didn't get a chance to save that slide. So rockwelltrading.com/tradingpub, all lowercase there, and I could actually type in, actually, yeah, someone shared it there. Thank you. Now, there were a couple of questions about Nadex that popped up, and if you want a free Nadex demo account, if you want to get started, it's kind of a little tricky with the Nadex website to see where their free demo account is. So we made it easy. If you go to rockwelltrading.com/Nadex, that will take you to the free demo account. If you're interested in trading binary options, go ahead and sign up for one, but at least that could get you started where you could practice some of these ideas and get comfortable with the Nadex platform. It's pretty straightforward, and we do show the platform in more detail also in those DVDs and how to use the platform. So let's see here. We have a couple minutes left, and thank you for sharing those links. Were there any questions that I didn't get to? I can scan through here. Sorry about the brief interruption there, but I hope that the power crossover ideas and the ideas of using power or probabilities to place binary options trading decisions helped out there. Wolfgang asks about other trading times. With other trading times, with Nadex, you have expirations for most markets at 12 p.m. Eastern, 1 p.m., 2 p.m., and 4:15. So with the strategies that we introduce around the power crossover method, we're focusing on 4:15 expirations, so end of day expirations, and also weekly expirations in the DVD. So daily expirations and weekly expirations, but if you find that there are other rules or even the power crossover method on a short time frame, like a 15-minute chart, that's not what I've done on a 15-minute chart, but many people share that the power crossover method rules help them identify trends on other time frames too, and that might be something to explore a little bit more. A question about UK individuals, people in Europe being able to open an account with Nadex. Nadex is for US residents, and I know that there are a lot of binary options brokers overseas, but because I do not live overseas, I do not have someone that I currently could recommend. I'll look into that in more detail, but it shouldn't be too hard to locate a broker overseas, and for US residents, Nadex, in my opinion, is the best option. Excellent. Hey, Raleigh, if you're there and it's easy, were there any questions that popped up? I'm kind of scanning through, but if you had any questions.
Sure. Yeah, there were some questions that came up there. One question that a trader asked, and I think was a pretty good one, which was, can somebody use the charts that they use to trade the futures markets to make decisions about trading next Nadex, or do you have to use a special Nadex chart?
You don't need to use a special Nadex chart. Now, in the software, you could bring up a chart that shows the underlying market, and you can get a basic chart that way through the Nadex platform. But if you're already trading another, like the futures as an example, you could just use the futures to make decisions. If you go to nadex.com, or if you sign up for the trial platform, you'll see that it shows you the underlying markets. Whenever you're trading a derivative like binary options, it's a derivative because it's deriving its price from an underlying market. So there's always going to be an underlying market tied to the market that you're trading, and you could bring up that chart with the current charts that you have if you're already trading those markets, or if you don't already have charts for like futures, you could just bring them up through the Nadex platform.
All right. Hold on for a second. I just had somebody ring my door. Hold on
No
for a moment.
problem. And so there are a couple of questions about the power crossover method, and the power crossover method is based on 3 indicators: stochastic, RSI, and MACD. In that special, you get the rules uh, for the indicators, so you could see exactly what you need to set up your charts and how to use those indicators to identify trends. In the DVD that you get, it's actually showing you how to use the power crossover method to trade stocks and even options. So it's a method for swing trading stocks and options if that's what you want to focus on. But as we mentioned earlier, I found that it's also a very powerful way to trade binary options using probability. So you kind of get a 3-for-1 deal there with one of those DVDs, and then there are some educational DVDs around the binary options trading and how to use the strategy.
All right. Just going back over some things there, Mark, it was interesting right there, unfortunately, when you had to take a little bit of a hiatus there with your technical issues there, you were going right into talking about the power crossover method, and there were several questions that came up about exactly what are the indicators that you're using on the bottom of the screen and what drives the coloration of those.
Mm-hmm. Yeah, the indicators are based on stochastic, RSI, and MACD. And so we're looking at crossovers taking place. That's why we call it the power crossover method, because we find that when that happens, it's very powerful and helps us identify trends. And so those rules are discussed in greater detail, and I do it great justice in the DVD. But what I've done just to make it super easy is whenever those conditions are present, I've set up my software to create highlight bars. So I get green bars and red bars. Now that's something you really don't need to do. It makes it easier visually, but if you're using some basic software, you can just set up the indicators and look at the indicators to make trading decisions. Or if you're using software like Trade Navigator or Trade Station or another popular package that allows you to create highlight bars, then the rules discussed in the DVD are very straightforward, and it should be pretty easy to set that up.
Okay, good, because that was another question that came up with there other charting software packages that where you can set up the power crossover method.
Okay. Yeah, and the best charting software, I mean, to be honest, there isn't a best charting software. It's what you feel most comfortable with. I do show exactly how to set things up in Trade Navigator. So if you want to, if you don't have any software, you want to take a look at Trade Navigator, you can, but whatever you feel most comfortable with and what suits your needs.
All right. Mark, from your perspective and your experience in trading with these, are there any particular, markets that are favorites of yours for trading where you found some consistency over the past several months, or is it basically you let the power crossover just help you understand what the best setup is, and that's the market you look at?
Yeah, and that's it. It's finding, like, I like the S&P 500. Here, we could go back to the probabilities just to give you an idea. The probabilities for crude oil, I think, is a great market for the power crossover strategy. The S&P 500 with the binary options idea is great. Gold's a nice one too, and gold's a favorite. The Dow 30 or the mini Dow, the YM, another great one that seems to trend well with the binary options. Crude and gold even great for just general swing trading with the power crossover method.
All right. Excellent. That's good feedback. And I think that's a good point, people, at this point in time. Once again, having a tool here to help you scan and identify opportunities sounds like that's exactly what we need, especially when we have, pardon the pun, lots of options to consider.
Oh, you pun guy.
There were some questions. I know I had to.
It,
I couldn't help it. There were some questions about what brokers can you use to trade binary options. And, with Nadex here in the United States, the Nadex is the exchange. You're actually signing up an account directly with Nadex. There are no introducing brokers at this time for trading binary options through Nadex in the United States.
and there was a question about delivery charges for overseas orders with the DVD offer. There's no additional charges. Excellent.
Okay, and I think that about covers it. We have just give it a couple more minutes to see if there's any other questions. I know once again earlier on, and the nice thing about the forum here, many of the questions were already answered by some of the members that have joined here, but there was a question as to what it costs to trade a binary option, and that's 90 cents. And I also know that, it's the cost is capped at $9. In other words, if you trade 10 lots, it would be $9. But if you trade 20 lots, it's only $9.
Yeah, thank you, Raleigh, for bringing that up. And so there is an advantage if you're trading more size, but if you're looking at probabilities and you're using that $5 better rule, then that helps offset any fees.
All right. Well, Mark, once again, I want to be one of the first to thank you for your time this afternoon, and I also appreciate